Hi and welcome. Good afternoon to everyone. A warm welcome to all our participants across EPS platform, YouTube, Twitter, and Facebook into this today's edition of Business and Banking Dialogue. Today, we have one more channel is what we have added. Today, we are also live on LinkedIn. So a warm welcome to participants in LinkedIn. My name is KK and I'm the host and moderator for this show. The topic for today is success mantras for scaling up startups, for scaling startups, okay? Which means we're talking about startups and how do they scale. And we will know from Sushma Kaushik as to what do we do to kind of bring up the startups from an early stage to a matured stage. So Sushma, many of you all know her, but Sushma is a partner at Aavishkaar and brings with her over 18 years of diverse experience in the field of early stage investing, small business incubation, and consulting across various sectors. Sushma has worked to identify, manage, and exit large number of companies and has worked closely with several inclusive business entrepreneurs. She has several startups under her watchful eyes. She also mentors startup in her free time. Good afternoon, Sushma, and how are you?
All well, KK. Hope all is well at your end.
Yes, absolutely. Thank you very much. We are reaching a milestone, Sushma, which is the 50th episode sometime next week. So you've been a guest to one of our shows, couple of shows, and you've been also perhaps been watching these shows. Your thoughts on how are we doing and how is it to you beneficial to the society?
So kudos to the EPS team. I think this was an excellent initiative started by you guys, especially in COVID times, when physical interactions with people or industry experts was a challenge. And you managed to get some of the best people in the industry to share their thoughts on subjects that otherwise would have been very hard to access. And even the format was so easy and simple for people to assimilate. I think it's a wonderful initiative, and I do hope you continue this post the lockdown.
Thank you. Yeah, we will try our best, and thanks for those words of encouragement. We'll only be scaling up from here, like the topic of today. So, Sushma, I mean, we can't help but talk on COVID. That's what is really plaguing everybody of us, and so that's something we need to talk. So governments around the world have released more than 13 trillion to hold together the otherwise falling economies and somehow to maintain some growth, which, as you know, is now almost negligible across the globe. It is estimated that the government deficits can go up to as high as 30 trillion by 2023, according to McKinsey. So in this volcano of disruption, what is the status or how are startups doing in general?
Sure. So, too bad COVID happened, right? But I don't think any entrepreneur, whether it be it a startup or be it a mature company, ever anticipated an event like a COVID. Or I don't even think there was a playlist of what to do in an event of COVID, right? So COVID notwithstanding, I believe entrepreneurs will continue to do their thing. In fact, maybe COVID will open up new opportunities as we are seeing when we talk to entrepreneurs. Clearly, digital transformation is something that is picking up at a pace that was not there before. We always used to push startup companies and even mature companies to look at technology as an enabler, and we would always receive a lot of resistance of oh, what's the need? It's unnecessary cost. We can manage well without any of digital interventions. And thanks to COVID, they're all sitting up, taking notice, taking charge, making amendments, changes. So, a host of opportunities have arisen thanks to COVID. And so I don't see this as a deterrent. Yes, there is going to be a slowdown in across economies. It's not just specific to a certain sector or a certain geography or a region. It's across the board. And so we should take it in our stride. Startups will continue to perform, although business plans are a little off by a few years probably, but
Yeah.
that's really no reason for one to stop and stop doing what they were always doing.
Thank you. Excellent. That's a word of encouragement from you. Otherwise, a dismal situation out there. So we get on to the topic of the day, and I would like you to give us a perspective on the evolution of or the life cycle of startups, from an early stage to scale up. How do they transit across startups, both across these value chain?
Sure. So first, I think I'll start by explaining what a startup is, because a startup again is a very confusing word, and a lot of people wonder, why do we still call Amazon a startup or a Paytm a startup when we are
Yes.
referring to them?
Yeah.
And then one begs to ask that then if those are startups, how long does it actually take for a company to be in the growth phase? So just
Yes.
to clarify a few things, startups are basically those companies where they are still trying to figure out a product market fit, trying to figure out which customer segment to go after, how to tweak a certain product. Some of them would probably have not seen a path to monetization of how to monetize the products or services that they're developing. Some don't even know on how to make it a positive contribution product. On one hand, they don't even have a revenue monetization path. The next phase would be on a positive product contribution, and then comes profitability in the journey or in the life cycle journey of a startup. So all those startups that are looking at still figuring out the product, still figuring out which segment they're after, and are still in the figuring out phase of monetization would come under a startup category. And all those where they have passed all those hurdles, they have mature products, they have paying customers, paying sustained customers, probably are PAT positive, are the ones who would qualify as a scale up phase of the business. So that's the first distinction important to bring about.
Okay. That's great. Now, when we are talking about, you have been instrumental in promoting a number of startups, right? So how does the focus shift from as the business transitions from early stage to growth to scale up? How does this transition happen?
Yeah. So, the journey of a startup and a startup entrepreneur is a challenging one. And it would be quite fair for me to say that there's probably never a dull moment in the journey of an entrepreneur. So, if I were to break it down, there are probably four stages of a startup journey. The first stage being the existence stage, right? Where the
Yeah.
startup is just, struggling to be in existence. And it will probably be a single or maybe a two, three entrepreneur or founder team who have come together, who have an idea in place, and who are working towards making that idea a reality. So that is stage one of existence. And they kind of trap, they just make do with whatever limited resources they have in developing their product. The second phase or second stage of these startups is the survival stage, where they're probably moved away from identifying or figuring out the product market fit. So now they have a product, they've identified a customer who's willing to pay for that product, and now it moves from just existing to actually managing relationships, relationship with your customers, relationship with your employees. Your teams will also grow when you move on to the survival stage. And the organization, will still continue to be a simple structure. The third stage is the success or the growth stage. And now this is a very interesting transition that startups make in this stage. Uh, in this stage, the startups now have established products, are constantly innovating on their products. They have customers, their customer base is expanding. They know how to move on to new, maybe new geographies, new territories, new products. The organization structure also is more evolved. It will be more tiered. It's no more just the entrepreneur or his co-founding team taking decisions. There will be multi levels of decision making. Suddenly cash flow management takes priority. Their ability to leverage or finance also will be far more evolved. So the challenges at that stage are far different from what it was in the survival stage or in the existence stage of startups. And then last part of the journey is clearly the takeoff, right? When the company has overcome all its initial challenges, has identified the right path to go after, and from there there is no looking back. And then it becomes a conglomerate of sorts. They probably start multi lines of businesses. The complexity of the organization structure increases. The financing requirements of the organization also changes. So that's the stage 4 of a startup journey. So if I were to break it up, these are largely the 4 stages of a startup journey.
Okay, thanks. Uh, we've spent, these 5 stages that you talked about. Uh, I mean, uh, there is no doubt that if startups have to move up the value chain quickly, there has to be some amount of speed and direction. And I think they are important for scaling up to from a startup business. Are there any proven approaches or frameworks or template to ensure speed and direction in a business?
So I don't think, unfortunately, there's no single playbook for a startup entrepreneur. If they were, I guess, everyone would go after it, and we would only be talking of success stories, and there would be no such thing as a failure. But
Right.
there is a journey, and there is a hard journey that entrepreneurs make in when they start a startup journey, right? Just to give you some statistics, I was just pulling out while preparing for this. I pulled out some numbers from Crunchbase, where they had surveyed close to 3,000 startups, and the mortality rate of startups or the failure rates of startups is as high as 90%. And I'm saying this not to put off entrepreneurs who are aspiring to start something of their own, or professionals who are still in their cushy jobs trying to get into entrepreneurship. But I'm just saying it because it's important to know what are the challenges that entrepreneurs face, and are there any ways of overcoming these challenges. So the 5 top reasons for startups to fail are: 1, when there is no market need for your product. That means you've just assessed the product you're after wrong, right? So your research for you to believe that a certain product is required in the market is probably flawed. So that is the largest reason why startups fail. Almost 20% of the companies that were surveyed failed because they identified, sorry, almost 42% failed because they got the product wrong. The product wrong, the segment wrong. The people who they were creating that product for didn't even find the need for a product like this. So clearly this is a significant factor. So all those who are planning to do something or start something, first figure out, is there a need for a product like that in the market? The second main reason why startups fail, and this is a serious reason, almost 30% fail because of this, is because of lack of funding, or they run out of cash. Again, this also requires a little bit of a skill set, because estimating cash flows and budgeting is a very critical part of a startup journey. And if you get that wrong, then clearly you don't know how long you're going to survive. You don't have the right runway to survive. Unless you have like a bottomless pit of capital, someone is willing to fund you, then clearly you won't be able to attract the right set of teams, and won't be able to create the right product, hit the markets at the right time. So that's one of the second main reason for failure. The third main reason for failure is not attracting the right team. And this I've noticed in a lot of technology startups, especially, a bunch of very enthusiastic tech entrepreneurs get together, trying to solve a problem which they believe nobody in the world has ever identified or solved for, which is fantastic. But what they do, where they fail to realize, is this product still needs to be sold. That means there must be takers out there for the product that they are developing. And in their initial euphoria, they fail to make that assessment. If they fail to make that assessment, that's fine. And if they truly believe that there is a need for the product, that's fantastic. But somebody needs to go and sell that product. And if the initial team who have come together don't have the skill sets of selling, then there is a big challenge on the hand. So having the right mix of different skill sets in a team is important. So many of you must have found that investors, startup investors, early stage investors, kind of encourage tech teams to have co-founders, and this is one of those reasons, because we found that some founders have certain skill sets, and if they're all complementary, they make a winning team. So this is one of the reasons why startups. The fourth is misjudging competition. Find they're working on certain products, great. But if they don't realize that competition, someone bigger, better, stronger than them, is already working on such a product, then probably their chances of survival is that much lower. And a case in point that comes to my mind is, so there was a Snapchat equivalent that was introduced in India sometime back. I can't remember the name, but it was in a regional language, and the way they were positioning it was that it's a vernacular language equivalent of Snapchat. And there were a lot of takers for something like that. And this was before Snapchat came here. And the minute Snapchat came in, Snapchat and TikTok both together kind of decimated that startup. And the entrepreneur didn't know what hit him. He didn't have the resources to fight someone like them. This clearly required very deep pockets for customer acquisition, which a startup unfortunately doesn't have the luxury of. And so that was the end of that startup. Right. So misjudging competition, not seeing where it's going to come from, is one of the other reasons. The fourth reason. And the fifth reason is in just getting the pricing wrong. The cost overruns tend to kill many startups, where even before you are able to complete a product, you have actually run out of the capital resources that you have, and that probably will see the end of day for these startups. So these are mainly the reasons, why startups fail. But coming back to the question that you asked, that speed and direction is most important for startups. Absolutely. Another important thing is agility and ability to notice what's going on around you. Successful startups have been those who have been very successfully able to pivot from plan A to plan B to plan C and maybe plan E, for all you know. One such example, all of us very frequently use YouTube. But do you all know that YouTube was not YouTube when they started off? YouTube actually started off very interestingly as a dating app where people could put up short videos of themselves to prospective partners. And unfortunately, I don't think that saw too much traction. But what they noticed is a lot of people were very willing to put up short videos of themselves doing various things. And that's how YouTube evolved to what it is today. And that's probably why Google saw the kind of value they gave. I think they valued it at close to 65 billion when they acquired YouTube. Right. So again, all credit goes to the YouTube entrepreneurs when, where they very quickly realize that this is not working, but something else is working, and let's move in that direction. Similarly, I'm sure most of us have heard of Slack. Slack also didn't start off as we know it today. Slack actually was a online game, and it was a very successful online game. There was nothing wrong with the game itself. But what happened was the entrepreneurs couldn't monetize it. No one was willing to pay to use that game. And so very quickly they realized that some of the criteria, or some of the base of that game was in social messaging. And so they moved that from being just a game, online game, to a professional chat and messaging service. And that's how we know Slack as it is today. And that's why it's like $1 billion company today. Right. So again, all kudos to the entrepreneurs who sat up, took note of the problems and challenges that they were facing, and turned it into an opportunity, which then became a big success. There are also multiple stories which are forgotten many times. Are in their life cycle, everyone would have pivoted in some form or the other, but nobody ever talks about it. So pivoting is a very important skill set that entrepreneurs need to learn very early on. They shouldn't be very hung up on their own business idea when they started something. They should be open-minded of certain, things that are going around them.
Thank you. So one of the mantras could be that follow the leader. So YouTube is a leader. So how about, are you saying a mantra could be you started a dating app, and maybe you'll succeed.
Who knows?
Okay, yeah, you never know. Okay. My next query to you is, so before I ask you my next query, let me talk to my participants. Participants, please, we continue our discussion with Sushma, and it's a wonderful talk that we are having on startups. There are lots of startups. Some of you also may be thinking of starting a business, which is, and many may look at this pandemic as an opportunity to start a business. There are opportunities also. It's not one way down for everyone. So, please ask your questions. Put your questions in the Q&A box, and we will try to get it across to Sushma. Or you could ask a question directly to Sushma, and we will, open up the box for you to kind of ask her. So my next query to you, Sushma, is that on the HGF, that is the high growth firms. Okay, do you identify HGF and say, yeah, this looks like a good firm to keep an eye on, focus on them, and help them out from early start to scaling up?
Absolutely. So as an investor, we always start with what is the problem a startup or a company is trying to solve. Is that problem big enough?
Yes.
Because if someone is trying to solve a really small problem, or a problem that only is catering to a small portion of the population, some investors could get excited, but mostly investors want to see what's the big problem, or what's the big idea that you're working on. And same for us, right? However, the challenge then comes in assessing, yes, okay, that is a big problem, that's established, but is the model that you're working on the right model to address the big problem? Right. And so that's why we tend to engage with startup entrepreneurs very early on to understand the approach they're taking to address that big problem. Is the model going in the right direction? We also tend to mentor and handhold a lot of entrepreneurs to achieve that, to make them investment ready in some ways. Maybe they require some amount of structuring help. Maybe they require some kind of just advice on the various products that they are developing. Maybe we have some insights on the kind of customer segment they are after, which they probably have not worked with before. Maybe we open up certain collaborative networks for them, which otherwise they don't have access to. So all of this becomes very important in supporting entrepreneurs who are going after big problems or solving for big problems.
Right. Thank you. So, in this journey of early start to scaling up, uh, what are the signals for making a transition to scaling a startup business? And if you can tell from your experience, how do you help this startup company to scale up? If you can give an example, don't have to name the company, but if you can give an example, that will help the participants.
Sure. So there's not like a one moment where suddenly a startup realizes and says, oh, I have moved from a startup stage to a scale up stage, right? So it
Yeah.
is a journey, most of them. And so and that journey kind of takes time. But as I was defining, a scale up phase is one where you have the product is an established product, the product market fit is established, customers are there, they are paying customers for you, and in a scale up stage, they are repeat customers as well. Right. So that's how we classify as scale up. And as I was saying, it is not a single day event. It is a journey, right? It takes close to, in our mind, some startups have taken close to 7 to 8 years to become a scale up company, sometimes longer, sometimes shorter. Um, but so saying, like, one of the examples, we have largely funded greenfield lending businesses, own balance sheet lending businesses. And it's been a fairly interesting journey for them. Some, like one of the businesses that we went in with, which was a greenfield lender, as full small finance bank, right?
Yeah.
And so it's a 10-year journey. Probably 10 is too short in the overall scheme of things. But the journey was first identifying the right segment, the right product, the right region to operate in, getting the pricing of the product right, getting us cost structures right, overcoming multiple external challenges and events. There were black swan events, there were other external macro events. So overcoming all those challenges, identifying the right risks, whether it was liquidity risks, solvency risks, external risks, overcoming those risks. Again, attracting the right teams at the right phases of the journey. In a startup, you need a certain type of team with a certain different skill set. And as you start growing, the skill sets change. And so the team needs to keep evolving. And most importantly, is also attracting the right set of investors who are aligned to your thought process, and who are willing to walk with you in this journey. So these are largely, how we've seen a startup journey, startup to scale life cycle journey.
Okay. So let's look at the most important person in the entire thing, the entrepreneur. Okay, the entrepreneur is going through finding his feet, survival, growth, takeoff, scaling up. So, what is the role of a leader or entrepreneur in these changes of life cycle?
So, as I said, the entrepreneur journey is probably one of the most challenging journeys. And also, it's a very lonely journey for many, because they have to internalize so many challenges, internal challenges, external challenges, and especially in the early years, they have no one to actually turn to. But that's not necessarily true. Um, we've seen a lot of successful entrepreneurs have not built things alone. They don't shy away from recognizing that they need help, and that they identify the right set of mentors and advisors to help them in this journey. Because I don't think we can ever say any man is an island, right? No one is an island. You do need to reach out and ask for help. And if you get the right set of people to guide you and help you, it makes it that much more easier. So entrepreneur initial journey is clear, where you need to, just need a lot of grit and determination and getting your product out, getting your pricing out, getting the right set of clients who are willing to support you in your journey, pay for it, all of the nice things. But once you reach a certain stage, there the challenges again are very different. Having the right set of balance sheet, having the right set of P&L, managing your cash flows. Cash flow management becomes one of the biggest challenges that entrepreneurs face. And not necessarily all entrepreneurs have the required financial skill sets. So then it becomes important for them to either bring in an external team to help them out, or have a team internally who can help in this, because cash flow management can become a huge challenge. For example, in a COVID time, we know of companies who are all over leveraged in anticipation of excessive growth, right? Nobody expected a COVID to happen in 2020. So in anticipation of this, a lot of people had taken on debt to start manufacturing. And now with COVID, the demand for products have gone up. So the sales have come down, but they're sitting on huge debts that they're trying to service. Now, a mark of a good entrepreneur in a growth stage company would be how to overcome such challenges, right? So the challenge of a startup is survival, while a challenge in growth has become different, of how to survive in that stage. So those are the kind of challenges that entrepreneurs tend to face, and they need to keep upping their the team or the skill sets that they have.
Right, thanks. So we talked about entrepreneurs in general. Let's talk about young entrepreneurs, because that's the startup is all about. Perhaps a lot of young entrepreneurs coming, and in this pandemic and post-pandemic, we could be a employment situation and employment problem. So many would think of starting their businesses. So on that line, there is a question that has come to you from Harish Prabhu. The question is, do the young entrepreneurs even have the basic mental and behavioral makeup to handle and surmount such adversity and take the business on a growth path? That's his first question. And second question is, what's your recent experience, if any?
Sure. No, Harish, you're absolutely right. We do see a lot of young, euphoric entrepreneurs fresh out of college with a great idea. I mean, some of the ideas that we have heard have been fantastic. In fact, recently we met startup entrepreneurs fresh out of college, starting something in the space tech space. And, we had absolute respect for those bunch of boys who had just graduated out of engineering, who had a fabulous idea, and in a sector which very few people are venturing into, right? And very clear thought process of what they want to build, how they want to build, and how they want to take things forward, which is fantastic. But that's not necessarily true for many startup entrepreneurs. Maturity is something that comes only with time. There is no shortcut to earning maturity. Experience, sometimes early stage entrepreneurs don't know how to handle teams. They come with a lot of emotional baggage, how to handle emotions, how to handle the different requirements of teams, the external challenges, internal challenges. It requires a huge amount of maturity. And many of the startup entrepreneurs sometimes fail because of that. But if they get the right set of advisors who can help them overcome these, but first they need to acknowledge and recognize the shortcoming they have. Only then can someone help them out. So you're absolutely right. Maturity plays an important role, and so it is a red flag for entrepreneurs.
Thank you. Thank you, Sushma, on that. So another query is about the funding in the good times, not these days. the query is that there's a lot of funding that comes from all over the globe for some young entrepreneur, and it could be, talking of $500,000 to, to a million and 2 million, etc. It just goes on. And so the question is, how do investors kind of size up what is the funding that is required?
So multiple things play a role when one is trying to evaluate how much funding is required. Again, it is the stage of the business itself is an important role in identifying how much capital is required, how much runway to provide, and also how much risk an investor is willing to take at that point in time. So clearly, it's not true that 500,000 or a 1 million will take a company anywhere. However, what it means is, for the risk that an investor is willing to take, will a certain amount of the risk be mitigated in the next round, right? So it's a very calibrated approach to investing that people take. And where we keep reading check sizes of from anywhere from 500,000 to as much as 100 million. Again, it's all an assessment of risk, the appetite, the stage of the company, how much capital is required to take a company to the next level, all of that when those checks are written.
Okay. So my leading question to that is that if you look at some of these so-called startups, they are still, they've been there for long. If you look at Amazon, or you look at Ola, Oyo, I'm not very sure. They are all in loss, right? They still continue to show loss. And so despite having so many years, and how come there are still people who are willing to put a lot more funds into such company, although they know that it's already in loss?
It's not already in loss. It has always been in loss, right?
Okay.
And so that is that, and hence that is the definition of a startup, where
Okay.
the contribution margins are yet to be figured out. The unit economics are yet to be figured out. That's one of the reasons why they're called startups. But for specific cases that you brought up, whether it was a Ola, whether it is a Oyo, whether it is the others that you're talking about, they are all trying to solve for a very big problem, right? So if while that problem is big, they've also taken on the solving path a couple of notches higher. They could have very well solved for this problem in a subscale, right? But that's probably not the intention of the entrepreneurs. They have a huge, audacious goal that they want to achieve. And so that requires them to take a certain path, which requires them a war chest, which they have been very successful in raising. And that's why they are where they are. For them, acquiring market share becomes that much more important, because once you acquire market share and you have a great product, then profitability and contribution margins are not such a big aspect anymore. Case in point being Alibaba. Alibaba also, just to draw parallels, was loss making for almost 10 years. And then after that, there was no looking back in terms of their profitability. I think every year they started throwing up profits of over billions of dollars, and so now that they are the market leaders in that space, and with that kind of profits, no one will even want to take them on as competition. So that is what these companies are trying to achieve. So one shouldn't only look at the loss that these companies are making. It is what markets they are creating and what leadership position these companies have when they are addressing these markets.
Okay. So yeah, you're already examining quite sure a lot of proposals. I think last time when you were on this show, you said close to 60 proposals you are looking at. Have you come across potential technology or innovative technology startups? You don't have to name them, but if you can tell us, what are these kind of technologies that are making the news for startups?
Oh, there are some very exciting and fascinating startups that we keep meeting and hearing the kind of the problem statement and what they are trying to solve for. So, especially in health, recently we met this very interesting woman entrepreneur who's working on using AI for mental health.
Yeah.
And as we all know, and thanks to COVID, it has come to the forefront. Mental health is a huge challenge that people are now finally willing to acknowledge as a problem, right? All these years, it was just brushed under the carpet saying, nobody talks about these things. But now, finally, with mental health being a big challenge, people finally accepting mental health as a challenge, there's a lot of technology innovation that is going behind in trying to address this, to remove the stigma behind it, and then solve for the problem of mental health. And mental health, I mean, from what I realized, it is a huge area, and there's a lot of innovation that can happen there, and it's just ripe for happening because we all have the right technology in place now to address these challenges. So this is one interesting startup that we came across. There's a lot of also interesting startups, as I mentioned, in the agri-tech space, in space tech. So people are using a lot of space microsatellite data for, again, getting a lot of agri sector inputs. And agri sector, one of the biggest challenges that we are or were facing was in the lack of data. And now with all these microsatellites up there, accessing data, accessing good quality data and real time this will be the game changer going forward.
Thank you. So let's take a question directly from one of the participants, Mr. Murthy, who's an experienced banker. Mr. Murthy, welcome to the show. And if you can unmute and ask a question directly to Sushma.
Thank you, Sushma ji, for a very brilliant presentation, sharing your insights and all. So I just seek two clarifications because my experience is startup is very limited. Really, we can count on the fingers. It revolves around two issues. One, you talked about 90% mortality, right? That's what you said. Number two is around the pivoting, right? And basically to scale up. So you said 90% the mortality and all that. I'm sure you had by now gained a lot of experience, the PEs of the world and all that, right? Is there a way that we probably reduce the mortality to say 80%, 70%? Do you see that way anytime soon? You think that we can do something to see that the failure rate comes down to 70 or even 10% is huge impact on the economy, as you know. Number two, we often hear about fail fast, fail small, right? But there is a huge emotional baggage. Of course, even I've seen one or two guys to do that. So is it only in theory, fail fast, fail this thing? How easy for you as a PE to probably push the entrepreneur or convince him, because a business, whether startup or a grown up, can go on as long as capital lets him, right? Not any other kind of ideas and all that, right? This is around the failure part of it. And then pivoting, right? Pivoting, basically, is it how often it is defensive, how often it is offensive in your experience? I'm sure I understand when I say defensive because the existing product or the customer base has failed, so I want to pivot, right? That is a defensive. The offensive one is sees an opportunity when people are willing to pay, but unit economics is not still established, right?
Right.
So I don't know whether too long a question, but I just want to share that. Otherwise, very good insights.
No, very interesting questions, sir. I'll try and address them. So first, on fail fast and cut your losses, I'll just give you an example of a news article I just read last week in the Wall Street Journal. So a very successful fintech startup had raised close to $60 million in the US in early this year, around Jan or Feb. So, and the news we read last week is that startup had folded up. So that begs to ask a few questions, right? If that startup had raised money, 60 million just early this year, he's probably sitting on that money still, right? What forced the entrepreneur to shut shop? Couple of things. So clearly, I have a lot of respect for this entrepreneur to have taken such a call. because of COVID, his product was addressing the needs of small business shop. And because of COVID, clearly there's a lot of stress on small businesses, and small businesses are cutting their costs, are fighting for survival. And this entrepreneur very quickly realized that his product has no relevance in the current scenario and will probably not have relevance for the next 12 to 18 or 24 months. So he would be doing a lot of disservice if he had just continued in his course of journey, saying that, yeah, things will improve. COVID is a short-term affair. We're all going to overcome this, and eventually things will come back to normal, whatever the new normal is. But what he did is he cut his emotional baggage. He cut his attachment with this company. He realized he had a fiduciary responsibility for the funds that he had taken from his investors. He's returned that money to his investors. Right? What has that gained him? That has gained him immense respect in the investor community. Everyone knows that this is an entrepreneur who can identify opportunities, but is also an entrepreneur who knows when to cut his losses. And so when he'll probably come back to market when the time is right with the right product, he will probably have a lot of investors who will be willing to back him again. So coming back to your question of fail fast, entrepreneurs, any startup is like a baby for an entrepreneur. They have to invest a lot of time, energy, resources, and emotional bandwidth in developing a startup, right? And as I said, it's a lonely journey. So people are not willing to give up, which is good. Persistence it's all about being persistent. But being persistent for all the wrong reasons is what causes the failure. And hence we see those mortality rates. But as I said, almost 40% of the reasons why startups fail is because they've identified the problem wrong. They're developing the wrong products. So is there anything that we can do to help entrepreneurs to cut down these mortality rates? Absolutely. Having a very vibrant startup ecosystem is one thing that will enable the reduction of mortality rate. Because if we work collaboratively, people can probably very quickly turn around and tell this entrepreneur that, listen, I don't think this product's going to work for ABC reasons. And maybe you need to relook at your business plan, or if you're wanting to invest time and effort and resources and capital behind this product or idea, maybe you should relook at it. And that's the role of accelerators and incubators. A lot of them are coming up, and that's I think that is a sign of a vibrant ecosystem which can support startup. I hope this addresses both your questions. The second question is on the defensive versus offensive. Pivoting is a requirement, and hence entrepreneurs who are agile only can pivot. Whether it's a defensive or offensive strategy, again, it's an opportunity that the entrepreneur has recognized, and it is up to them to take one over the other.
Okay.
Thank you.
Thank you. So one of the things that Sushma you talked about was on the entrepreneur. You said there are two types of perhaps there are two types of entrepreneurs: the unambitious one, who are low goals and not too scared to have any audacious goals, and the over ambitious who just dare to dream big. Is there a mid path for somebody to kind of really survive? And is dreaming big a problem?
Dreaming big should never be a problem, right? As they say, try to reach out for the stars. If not the stars, at least you'll hit the treetops, right?
Yeah.
So, and if you look around you, all the successful entrepreneurs are those who have really audacious goals or visions for themselves. And if someone wants small thing, I mean, even a kirana shop is a great entrepreneur. He's doing very well. He has no big ambitions, but he's happy. No harm in that, right? All we're saying is if you want to do something big and you're trying to solve for a big problem, then it better be a big deal. And so those are the entrepreneurs that one tends to hear of and speak of far more often than the smaller bonsais.
Okay, thank you. We take another question directly. Mr. Prabhu, could you please introduce yourself and ask the question?
Yeah, good afternoon, Sushma. Hi, Harish Prabhu here. Um, anyway, it's post-COVID, a large part of the consumers, right? I mean, who are borrowers, their credit rating would have been, going from good credit to bad credit, maybe to subprime. And a lot of these people are, ripe for consumer consumption loans, right? Both from a pure consumption point of view, as well as potentially for assets, right? Going ahead, let's say two-wheeler, etc. and all. So given that it's the bottom of the cycle at the moment, do you see that, new lending businesses can be started at this moment? Given that once, in a year's time or so, let's say after COVID and all, everything comes back.
So, in financial services, we've been through multiple cycles, and COVID is one of the troughs in that cycle, right? We've all seen the Great Depression. We have seen other such similar crises, the Great Financial Crisis that has hit, the sector, and other smaller crises, right? And everyone, it's only the strong who have come out stronger from every crisis. So, like, the question that you're asking is very relevant. When I'm talking to a lot of investor fraternity friends, everyone's like, oh, financial services as a sector is dead. I don't think there's any opportunity left there. We won't touch the sector with a barge pole. And I'm wondering why, right? And I'll tell you the reason for that. So back in 2009, microfinance sector saw a huge crisis. And what was the crisis? There was an ordinance that was passed, which kind of made operations for a microfinance lender a challenge. Did that mean that the demand had evaporated? Did that mean that the poor had evaporated or disappeared? No. The poor continued to remain. The demand for small loans or microcredit continued to be there. It's just that the liquidity in the system evaporated, and for a short while, right? And all those who were able to overcome that period of 12 to 24 months came out much stronger, much better than before. So similarly, I think a COVID kind of a scenario, exactly for the reasons that you pointed out, have the borrowers disappeared? No. Has the demand for these loans disappeared? No. Will these people continue to need these products and services? Absolutely. So it's a credit cycle. You have to calibrate your risk before you lend to them. And if that is done in a calibrated approach, I think we will also overcome this trough.
Thank you. Next question I have is from, thanks, Harish. Next question I have is from Mr. Joseph. He asked a question: what are the leading indicators of an investor not being the right fit for a company?
So I don't know whether to call it leading indicators or not. Again, it's very specific to the size of the company, the stage of the enterprise, and multiple other factors. But just to be very broad brush to answer your question, if the chemistry is not right with the investor, between the investor and the entrepreneur, and chemistry is something that comes up very early on. You can see in the interactions how that is going. If there is a fundamental disconnect in the chemistry itself, then clearly that they're probably not the right fit. The second one is on alignment of interests, right? So if the entrepreneur wants to go in a certain direction and he's saying it in his business plan, but the investor is saying, I'll give you money only if you turn left and go to London instead of going to, say, Australia, then then clearly there's a disconnect. And if the entrepreneur says, yeah, sure, I just need the money, I'll do whatever you ask me to do, then that is also dangerous, right? Because then clearly the entrepreneur is not clear on his vision of what he wants to do for his organization. and eventually there will be problems going forward. So identifying the right set of right set of investors to partner with also becomes important. And another part is also the life journey, the life cycle of how long you want someone to be a partner with you. If you believe that the road is going to be about a 10-15 year kind of a road journey, and but the investor is there only for 1 or 2 years, then clearly there is another disconnect there. So there are multiple lenses one needs to evaluate partnerships and various partnerships on.
Thanks, Joseph, for a good question, and thanks, Sushma. We have one final question coming directly to you. Tyag, can you please brief about your question and ask the question, please?
Hi, I'm Tyagarajan here. I would like to, have your views on one of the greatest legendary of tech entrepreneur, no less than Andrew Grove, who said only the paranoid survive. He's a tech entrepreneur and also a visionary. I would like to hear your views on Only the Paranoid Side, one of the greatest books by Intel founder.
No, I think he's absolutely right. And again, that comes back to the question on pivoting, right? Only when you are paranoid and only when you're constantly analyzing the external environment, internal environment, your capabilities, will you always try to be ahead of the curve. Complacency means you're going to become a dinosaur in your business, and very soon you will be obsolete as well, especially in technology when every second day someone younger, someone quicker, someone faster is coming up with path-breaking technology. One always needs to be ahead of the curve to maintain your positioning. So only the paranoid survives is absolutely the right refrain for all technology entrepreneurs.
All right. Thanks.
Thank you. Thank you, Tyag. So, Sushma, before we, we're almost reaching to the end of the session, but, session cannot, we can't close this until we talk about India. So the goal of Startup India, when announced in 2016, was a development innovation of products. It was meant for simplification of work, finance support, government tenders, networking opportunities, etc. So it's a whole lot of good things that came out. According to you, has it lived up to its expectation?
This is the initiative in particular you're talking about?
Yes, yeah.
Okay, I must confess that I don't know too much about this initiative and how successful or not it's been. But what I've normally seen with all the government initiatives are that it is all put in place with the right objective or right mindset. Unfortunately, where it fails is in the execution, and across the various government initiatives that we have seen, it's all put in place. The policies are made with the right intentions, with actually the best intention in mind. But where it fails, as I was saying, is in the execution, in it actually reaching out to the right startups at the right time, and making it a more seamless process. Would probably help. But bureaucracy sometimes kind of makes it challenging.
Okay, thank you. So, Sushma, thank you very much. I think we come to the end of the show today. So we spoke a whole lot of topics on startups and how do they scale up. And so we talked about right from the evolution, finding their feet, survival, growth, takeoff. We also said that technology plays a very important part, and people with technology may survive this pandemic and will succeed there. We also heard from her why startups fail. Okay, and one of the key factor she mentioned is the pivoting. Okay, pivoting is extremely important, and she also said that in one of the queries that being paranoid is something it's a good attribute, and you must always be ahead of the curve. So we heard about many points and why they fail. We talked about some of the examples of startups which are in loss, but yet they continue to attract a lot of funds. And we also heard a very good question on fail fast and what should be done about it. So we covered a lot of things in this 1 hour. Sushma, once again, a big thanks to you for coming, spending 1 hour with us and telling us so much about startups. We hope to see you in some other program very soon. Thank you so much.
Thank you. Thank you so much, KK. Appreciate it.
Thank you.